You can experiment with your investments. Choose the stocks you like one by one, or select Sector Spider ETFs and add the diversification of an entire sector of the S&P 500, like healthcare. With liquidity, all-day tradability, and transparency. Ready to add diversification to your equity investments? Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for prospectus containing this information. Read it carefully. Visit us at sectorspiders.com.
Equity ETFs may have blazed a trail for fixed income. Experts say in the future they expect fixed income ETFs to grow and branch out like the equity side. But how fast that happens, well, that may depend on interest rates.
And as we look at the future of fixed income, I think we're going to focus increasingly on more targeted or nuanced strategies. So I think you'll see more in the way of engineered type of indexes around fixed income in the same way we've seen in equities. And certainly an increased focus on active strategies to really take advantage of all that fixed income has to offer.
Equity ETFs far outnumber fixed income ETFs, which include bonds and other securities. But the anticipated build-out of fixed income could be disrupted if interest rates spike.
Well, I think a lot of it depends on the bond market itself. So if bonds begin to lose value, that's that inverse relationship. Interest rates go up, bond prices fall. So the question is how will investors react? If that occurs, there may be a flood out of bond products, bond ETFs.
So far, demand for fixed income has remained strong. Even while stocks have rallied to record heights, the quest for yield seems constant.
I can tell you that I don't go more than an hour in a day without talking to somebody about the need for income and the challenges of generating income in a low interest rate environment.
I think the excitement about fixed income is when you think of investors of all sorts, whether it's individuals or institutions, right? There is a deep familiarity and need for yield or income. And so when you start to attach that to really accessible strategies that you find with ETFs, I think that's what has people really engaged around fixed income strategies.
We are seeing certain trends within the bond ETF marketplace. For example, target dated bond funds. In other words, bond funds that are geared toward a specific maturity date, for example, 2020, 2015, where those bond ETFs own bonds that are geared for that maturity date and they expire once that maturity date has been reached.
As we see ETFs develop and as we see different sub-sectors of ETFs like fixed income develop, one of the things we truly believe is that you're going to have more and more investor-centric types of approaches. So there's a focus not so much on where the next product growth is coming from, but more so what are the true needs that investors have and how can those be represented through fixed income strategies.